Hiya, I'm Elliot from Free Life Financial. Purchasing a property with a mortgage can be one of the biggest financial decisions of your lifetime. And there are a few mistakes that a lot of people make. And these mistakes, some of them could cost you thousands of pounds. Some of them could even stop you from being approved for a mortgage altogether. So they are the mistakes that I want to go through one by one to hopefully stop you from making the same mistakes. Let's get started. Number one is gambling transactions on your bank statements. So if you like a bet now and again on a weekend, totally fine if we're talking just a few transactions. But some people, when they apply for a mortgage, will have lots of gambling transactions on their statements. It could suggest to the lender that you're not good with money. It could also suggest that you're addicted to gambling. And if you're addicted to gambling, then they would class you as too risky, potentially, to give you a mortgage. So if you were planning on applying for a mortgage in the coming months, I would recommend keeping the gambling transactions to a minimum. This could potentially, in some cases, stop you from being approved for a mortgage. Mistake number two is using your overdraft. Now, I'm not saying absolutely never use your overdraft, but if possible, don't dip into your overdraft on the months leading up to your mortgage application, because if you go into your overdraft every month, even if you come straight back out of it when you get paid, it can make you look financially unstable. It can look to the lender as if you're struggling to get by and you're relying on your overdraft. And if that's the case, they might think it's too risky to give you a mortgage. Mistake number three, this is a big one. It happens all the time, not getting pre-approved before you find a property. So there are lots of people get in touch with me in advance before they've started looking for a property because they want to find out how much they could borrow so they know what kind of house they can start looking for. And they want to know how to get things in order well in advance so there are no problems when the time comes to apply for the mortgage. That is the right way to do it. But unfortunately, what lots of people do is they fall in love with a property and then contact a mortgage advisor to get pre-approved. That can be a problem because if you don't get your pre-approval straight away, somebody else might snap up that house before you. You'll call the estate agent to make an offer. They'll ask, do you have a mortgage in principle, decision in principle, pre-approval, agreement in principle? It's all the same thing. They'll ask if you have one of them. And if you say no, and then somebody else makes an offer who says yes, then there's a good chance you could lose out. So definitely get pre-approved before you start your property search. There's nothing worse than falling in love with a property and losing out just because you weren't prepared. Speaking of not being prepared, that's mistake number four, not being prepared, especially when it comes to documents. When you apply for a mortgage, you're going to need to provide documents, usually payslips, bank statements, photo ID, proof of your deposit. But there can be lots of other things that you might be asked to provide. You could be asked for a P60. You could be asked for an employment contract. There can be lots of other things. It totally depends on your circumstances. So again, when you speak to a mortgage advisor, you can ask your mortgage advisor, what documents am I going to need to start getting together? But more than anything, just make sure you've got access to the kind of documents that you think you might get asked for. It doesn't mean you have to print everything out that the lender could possibly ask. Just make sure you have access to things. Do you have access to your bank statements online? Do you have access to your payslips? And if you needed a contract and a P60, do you know how to find them? Your ID, do you have your ID? Is it in date? Does it have your correct address on? There's been times when I've been ready to apply for a mortgage for a client and they just can't find their ID. They've got it, but they can't find it. And you're not going to be able to apply for a mortgage or buy a property without valid ID. So that is mistake number four, is not being prepared. Just make sure when you speak to your mortgage advisor in advance, you find out what documents you're going to need, what documents you might need, and make sure you have access to them. Mistake number five is taking on new credit agreements before you apply for a mortgage. This is not to say that you absolutely cannot do this, but if you can avoid it, I would say to avoid it. Firstly, applying for a new credit agreement could negatively impact your credit score. We definitely don't want to do that just before we apply for a mortgage, but also taking on new credit can affect the affordability because the lender will see that you need to service this other debt, so they might be prepared to lend you less because they know that you're going to be spending money every month on this other debt. And also in some cases, if you've just taken out a large amount of credit. Some lenders could even think that it's too risky. You haven't proved yet that you're able to service this new debt, so they might be reluctant to give you a mortgage. So if you can avoid it, I would recommend avoiding taking out new credit agreements in the lead up to applying for a mortgage. And finally, mistake number 6 is not factoring in additional costs. Let's say you're purchasing a property with a 5% deposit. You don't only need that 5% deposit, you will need more cash for other costs. You've got your 5% deposit, then you're going to have solicitor fees, you might have mortgage broker fees, removal trucks, and furniture. You might need to purchase furniture when you move into the property. So it's not just a case of saving up enough for the deposit. The costs, the overall costs of moving property do vary. It depends on your circumstances. For example, if you're selling a property and buying another one, usually your costs will be higher because you might pay an estate agent to sell your property. You'll usually pay 2 solicitor fees, one to sell your property and one to purchase your new one. And then, of course, there's the dreaded stamp duty. Depending on your situations, you might need to pay stamp duty, whether you're moving home or you're a first-time buyer. So definitely find these things out in advance and make sure you have enough cash to cover all of the necessary costs. And they are what I think are the biggest and most common mistakes to avoid. And if you do manage to avoid them, you're hopefully going to have a much smoother process ahead of you. If there are any mistakes you have made in the past when it comes to mortgages, or you know somebody else who has, feel free to share that in the comments. You could really help somebody else avoid that same mistake. Thank you.